we just remind ourselves that on the weekly chart, we are moving inside of this wedge, sorry, inside of this ending diagonal. This ending diagonal is now rejecting at this neckline. The internals are correctly segregated. The current move is motive. This is a weekly chart, very heavy, of course. So it's a 1, 2, 3, 4A, 4B, ABC into 4C. This is actually a motive wave, what we're in right now. It is, of course, a degree 3 at the neckline. It's doing a 4A, 4B, and 4C at the shoulder level. This is going to be the right shoulder equating with this left shoulder over here. We expect a very lengthy A, B, C, D, E into that degree 4 of that rise because of the weakness in sterling at this point, unless there is a better fundamental projection in numbers regarding, of course, internal numbers out of the UK economy. Mr. Bailey will be making a speech during Davos. So anyway, we expect strong consolidation until US dollar reverses and moves higher against the yen. You're looking at the same for the sterling against the yen. So we expect this shoulder to the right to equate with this shoulder to the leg, take out that neckline gradually and test that higher degree neckline at 176. This market is supporting at a cycle translation axis shown here. This is your cycle translation axis, and it's very indicative that that shoulder, you're having the shoulder here to the left, was on bearish momentum below the cycle translation axis. Current support is on bullish momentum at a very strong W bottom here, on bullish momentum on top of the cycle translation axis. So given that this is a very updated chart, this is last week's chart. This is the current correction, but it's still on very strong momentum, higher degree momentum. So it means we're going to take out this neckline. We're going to take out the neckline at 163.74, regardless of how long it takes because of the weakness in sterling. The market is undervalued at this point, and the projections out of this chart show that the market is undervalued and it is just sitting out the current weakness in sterling or doing a strong consolidation at that neckline to take it out on the first fundamental reversal or first bullish fundamental release regarding sterling. Right, so let's take a look at that degree 4 correction. That's what we will be trading in the first place. Okay, we are looking at, this is our motive wave. We're just saying you have a wave 3 and it's going to be extending on the weekly chart. This, the origin of that wave 3 is right here at that neckline, not at that internal wave 1. That internal one is what's going to be the extension to that wave 3. It's really bouncing on top of a level 1 here. So there is a level 1, 2 in Y, there's a 3, A, B, and C into 4. Market did a 5. The market is giving itself room to fall back and test all the way to the top of level 1. That's what we mean to say. This market can go because of the weakness in sterling all the way to 151. So we should not be surprised. And it is still bullish because you're bouncing at the top of level 1. If there is a more stronger numbers regarding the UK economy, seriously, UK PMIs are coming out on Wednesday. So maybe they give us some kind of impetus. If there are stronger numbers, you are looking at a bounce of that internal one here, which comes in at 153. You're looking at 153.59. You're looking at 151. We are for a weaker sterling, more or less. So many problems on the continent, of course, and in the UK. Therefore, the current market is going to be a sell. When we go to the 4-hour charts and when we go to the 1-hour chart, we just want to take a negative trigger seriously on the 30 minutes and on the 15-minute chart. We would go for a dual or double negative momentum cycles. On the shorter, one of them on the short term, another on the intermediate term time frames, as close to these levels as possible. That level will be 163.6 if we can get it, right? The current correction that we will be looking at on the 4 hours and on the 1 hour is still young and can take you to these levels. Right now, market's only doing 160.6 or something like this. Remember, sterling is moving higher against the dollar. It will continue to move higher against the dollar for some time. It's correcting. Sterling yen will correct with the sterling dollar. reject at that level. This wave 4 that we're looking at it here, it is showing as a higher degree wave. Remember, we just said there's a 1, 2, 3, 4, and a 5. Complete Elliott structure. This is higher degree A. There's going to be higher degree B with the extent of testing level 1. That higher degree B is going to be already did an A in yellow, B in yellow, C in yellow, and A bounced at the 200-point moving average. It's doing the B. Okay, so short term, you can buy into this all the way to 163.6. Maybe even low, but it's unsafe. Long term, the more interesting prospect is when there is a top out in sterling against the dollar. We'll be looking at that very closely, very shortly. When there is a top out in sterling dollar, there is going to be a very aggressive top out in sterling against the yen. And this will do a wave C down, right, into at least 3 swings or 5 swings, or the NEC is a 5 swing. It's going to be an internal degree B, the last correction to that market before the market moves higher. So that's probably the last bearish move. Takes you from 162 and 163.6 all the way at least to 153, 1,000 points down. This level here, 153.6. All right, so 153.6, 900 points down. Maybe even level 1 itself, 151, 1,100 points down. This is the move to look forward to. It's very dismal, very poor momentum on the daily, meaning the daily is still doing some kind of correction. Let's take a look now at the 4 hours. Let's take a look at the internals and the potential for the current moves. Okay, so we are looking at, there is an A, B, and a C, of course. This is the high degree with B in yellow that we're looking at here, and shows, of course, on the daily. Just to remember, this is that same B here that we are looking at. This B here, right, in yellow. Now we have an A and a B in white. That C in white must be 5 swings. That's the last leg of that move. That C in white must be 5 swings. You'll find it squashed inside of an ending diagonal as usual, but it is 5 swings. And the retractions are going to be very, very, very poor, very small. If sterling, the retractions now, impressions, if sterling is accelerating against the dollar, this will be doing 165, this will be doing 163.8. Right? So short term, we should be buying into this with C, sorry, to these levels. That's where we expect momentum to reverse.